Hey guys, welcome to the video. Today we're going to be talking about the Analyze tab in the ThinkorSwim trading platform. My name is Kirk with Tactical Options Trading, and we make videos just like this all the time where we talk about the stock market and options trading. So I hope you'll consider subscribing and clicking that bell so that you don't miss out on any future updates. All right, let's get into it, guys. All right, guys, we are looking at the ThinkorSwim trading platform, and we're going to be analyzing the Analyze tab in ThinkorSwim. But before we get into that Analyze tab, we have to have something to analyze. So let's take a look at TLT. Let's say we're looking at TLT to make a trade. And we've noticed that TLT over the last little while has been kind of trading in a sideways range or sideways chop. We can see that we've had some rallies, some declines, some rallies, some declines. And we wanted to maybe take advantage of that neutral trade that's just kind of chopping along here. So let's go ahead and look in the Analyze tab, and we'll go ahead and see how we can analyze a trade. Now, when we first come into the Analyze tab, you can see along the top here we have different sub-menus that we can come in here and click that are going to give us different ways that we can analyze this trade. So we have, we have the Add Simulated Trades here. We have the Risk Profile, which is the tab that we're currently looking at right now. We have the Probability Analysis, Economic Data, Think Back, Fundamentals and Earnings. If we're trading stocks, we can look at the fundamentals of the company. If we're also trading stocks, we can look at earnings data. But what I really want to focus on today is this one right here, the risk profile. Now, you guys, we did a video a couple of weeks ago that talked about profit and loss diagrams and how to understand profit and loss diagrams. So I'm going to put a link to that right up here in the video, and you can go check that out. It's really helpful to understand where you're making money and where you're losing money when you're trading options. So what we're looking at is a profit and loss diagram, and I want to tell you guys I currently have a trade in TLT. And now, saying that, I'm not recommending you trade TLT. I'm just putting that out there as an example. So let me go ahead and pull our trade up in TLT. So we have an iron butterfly that we sold in TLT. And when you're looking at a profit and loss diagram, there's a few things that we need to be aware of or understand. So over here on the left-hand side is our monetary value. So anything above this zero line here is going to be a profit, and anything below that zero line is going to be a loss. So you can see that zero line there, anything above is a profit, anything below is a loss. So you're looking at our profit and loss diagram, you can see that right here is where we want to be. We want to be above that zero line. So when we're trading this security or this or whatever stock we're trading, we want to have our stock at expiration be trading right in this area between this line and this line. So now when we're looking at a profit and loss diagram, there's two different colored lines here on this one. So there's a green line and a magenta line. So what these lines represent are dates. So the magenta line is today's date, and the green line is expiration day. So also we need to know that this line right here that runs straight down the middle is what the stock price is as of today. So right now TLT is trading at $119.47, and you can see where we're making a profit. So if we come right up this green line and we match it up with today, which is that purple line, and we come right over here to the left to our monetary scale, we can see that we're just above that zero, and that is evidenced by this price slice right down here. So you can see this 119.47 coincides with this 119.47 price slice here, and then you have a couple of other slices here that coincide with these two slices that are on the outside. So when we're looking at today, you can see that we're starting to make a profit on this trade. And then if we were to look at expiration and we were waiting for this stock to continue to hold till expiration, and it comes right up here to this green line, and we take this green line out over here to the left, you can see that we would be somewhere in the range of about $140 if the stock were actually in the same place that it is today at expiration. So now I want to draw your attention down here to the bottom left-hand corner. You'll see some dates, and those dates are color-coded just as the lines are. So the magenta obviously goes with the magenta, and the green goes with the green. Now I want you to notice what happens as I drag my cursor over these lines. you can see that there's dollars that start to change as you roll your cursor over these lines. So let's say, for example, we go back to where the stock is trading today, and we put our cursor right over that stock price for today, and you can see that today we're trading about $12.12 profit. But if we were to hold that all the way to expiration, then we'd be profitable of about $137. Now let's say, for example, the stock rallied today and it rallied up around to that 121 mark, and the stock rallied up around that 121 level. And let's say, so today we come over here and we could see that if it rallied up to 121, today we would be making a profit of about $40.43. But if that stock was still at that same place at expiration, we'd make about $288.54. A couple other things I want to point out here is these little red lines. And these little red lines are break-even points. So we have red lines on the purple, and we have red lines on the green. So on the green, this would be our break-even points at expiration, and on the purple would be our break-even points as of today. So it's just helpful to know where our break-even points are. Now I want to show you guys how you can move these price slices around. So you can grab these price slices and you can just move them around, and we can change these price slices by doing a few things. But before I actually get into that, I want to show you guys what this gray area is right here. You can see we have a gray area, and that gray area is the expected move. So basically, when you open up your Analyze tab, it's already auto-populated in here of a 1 standard deviation expected move. You can see that. I'm sorry, you can see that right up here at the top. 68.27. So our expected 1 standard deviation move, 68.27. Now if we came in here and we click a 2 standard deviation move, you can see that it widens those out to a little bit farther out. Now let's say, for example, you were analyzing a trade and you maybe wanted to sell a call credit spread, or you wanted to sell a put credit spread, or you wanted to sell an iron condor, but you wanted to sell it outside of that 2 standard deviation expected move. Well, let's say, for example, we'll just take our TLT trade off of here, and let's say we're just looking at TLT and we wanted to sell a call credit spread outside of that 2 standard deviation move. We could come right in here and see where that 2 standard deviation move is, and it'd be about the $126 on that upside and about $112 on the downside. So it'd give us an idea where that 2 standard deviation expected move is. Now that 2 standard deviation, or that expected move that we're looking at here, is based on expiration, or whatever expiration day we put in here. So we have October 2018 in here, October expiration 2018, and that's basing it off of that. Now if we move this date out to maybe November, you can see that as we move it out to November, that 1 standard deviation, 1 standard expected move, 1 standard deviation expected move is going to be a little bit farther out. So let's go ahead and put it back to October. All right, now let's talk about the price slices. So the price slices here, you can come down in here and you can move these price slices. As I said, you can just come up here and move them this way, or you can come down here and set those slices. So let's say we wanted to set the slices at a 1 standard deviation move. We could just do that by coming in here and clicking that, and you can see that it's going to put those right there at that 1 standard deviation expected move. Now again, this one right here, right down the middle, is what the stock price is actually trading at, and then this would be the expected moves out here on the outside. Let's say again, we're looking at TLT and we have that iron butterfly on there, and we can see that our break-even points are right here about that 118, and right here about the 124. Let's say we wanted to put those on a chart and see where the break-even points were on a stock chart. So what we could do is come in here and we could set these slices to break even at expiration. So again, there's that green colored date. We could click that 1020, and you can see that it moved those slices right here to the expiration, or I'm sorry, the break-even points. Now we could come in here and get set slices and set slices to the chart. So when we hit set slices, and we put it to a chart, you can see that it's going to put those break-even points on the chart here. So the break-even point to the upside is going to be 123.91. To the downside, 118.11. And as long as this stock continues to trade sideways inside those break-even points at expiration, which is going to be about October 20th, then we're going to be able to capture all that premium that we sold when we first sold this iron butterfly. All right, let's go back into our Analyze tab. Now let's say, for example, we wanted to add a few different days on here. So right now we're just looking at one day, one purple line here. But let's say we wanted to add a few days, a few steps in here. So we come in here and we add 4 days. We wanted to get 4 different day steps on here, and we could see what that looks like. Again, on the left-hand side, the bottom left-hand corner, we could see what those steps are going to be. So if we roll our cursor over, you can see at different dates, if the stock were at that point, you could see what our profit or loss would be. Now I want to show you guys how to add a simulated trade. So let's go ahead and take off our trade here in TLT. But let's put this back to the one standard or the one step expiration. And we'll take off our TLT trade. Now let's say we wanted to add a simulated trade. Let's say we're looking at Apple. Type in Apple, we come over here to the Apple chart. We can see that Apple's been trading up for the last little while, and maybe we are kind of bullish on Apple. It's been trading up. It traded right down into that 21 EMA, and we think it's going to bounce off that 21 EMA and continue to the upside. So we think we're going to maybe come below the market and sell a put credit spread. But we want to know where that one standard deviation is. So let's come back into the Analyze tab. We'll look at that risk profile. And let's say we're going to look at the October expiration. So we come in here to October, hit that October expiration date, put that in there, and we can see on Apple now that the one standard deviation move is going to be somewhere around that 199 mark and up here around that 238 mark or so. So let's say we wanted to formulate a trade where we're going to sell a put credit spread below the market, expecting the market to trade higher. So we're going to come down here below that 200 or about that 199 and sell a put credit spread. So what we would do is come in here to add simulated trades, and we could come in here to our options chain. We're looking at that 19th of October 2018 option series. We come in here, what did we say, that about that 198 mark. So we come in here to that 198 mark on the put side, which is going to be between the 200 and the 195. So let's say we're going to sell that 195. So we go ahead and click the 195. We're going to sell at the bid, and then we're going to buy at the ask. And so it's going to add those 2 trades in there. And now when we come back in here to our risk profile, you can see that our trade is now placed in here, and we have those strike prices at the 195 and the 190. So you can see that that we sold that put credit spread just outside that one standard deviation move. So if the stock were to trade down and it stayed inside that one standard deviation move, then our put credit spread would be safe at that point. All right, guys, that's going to do it for us here. I hope you enjoyed the video. If you found this video helpful, I hope you'll like and subscribe and maybe share this video with somebody else that you think might benefit from this video. Until next time, my name's Kirk with Tactical Options Trading, and we'll catch you later.